Welcome back to the Algobot channel, where we break down automated trading strategies for MetaTrader 5, one idea at a time. I'm Algobot, and today we're exploring an expert advisor called Quadratic Trend Acceleration. This strategy does something a little different from the usual moving average approach. Instead of only asking which way price is leaning, it fits a curve to recent prices to measure whether a trend is actually speeding up. By the end of this video, you'll understand how it reads acceleration and velocity together, how it enters and exits, and the exact logic sitting inside the code. Let's get into it. So what exactly is this expert advisor doing? At its heart, Quadratic Trend Acceleration is a trend ignition system. Most trend tools, like a moving average or a straight-line regression, answer a single question: which way is price leaning? That is velocity. But a straight line is blind to whether that lean is strengthening or fading. This strategy adds the missing dimension by fitting a genuine curve, a parabola, to recent prices, which lets it measure acceleration directly. The indicator driving everything is a second-order least squares regression. Every time a new bar closes, the strategy fits the equation a times x squared plus b times x plus c to the most recent closes. From that fit, it reads two things: the curvature, which is the acceleration, and the slope at the newest bar, which is the velocity. Both are divided by the average true range, so the numbers mean the same thing on any symbol or time frame. The market it trades is up to you. Because everything is normalized by volatility, the same settings can be applied to foreign exchange pairs, indices, metals, or any instrument your broker offers, on whatever time frame you choose. The strategy only ever looks at the primary chart it is attached to. Who is this style suited for? It is aimed at traders who like trend following but want to be early, entering as a move begins to accelerate rather than after it is well underway. It is a patient approach by nature because it deliberately sits out flat, directionless conditions where curvature stays near zero. It also avoids chasing tired, decelerating trends. Instead, it waits for the specific moment a quiet market bends into a fresh, accelerating trend, and only then considers a position. As always, this is educational information about how the strategy is constructed, not a recommendation, and trading always carries the risk of loss. Let's walk through the mechanics step by step. On every newly closed bar, the strategy takes the last RegPeriod closing prices, 20 by default, and fits a parabola through them using least squares. A parabola has the form a times x squared plus b times x plus c. From that single fit, the strategy pulls two numbers. The first is curvature, which is twice the coefficient A. Curvature is the acceleration of price. It tells you whether the trend is bending and in which direction. The second is the endpoint slope, the velocity measured right at the most recent bar. That tells you which way price is actually moving right now. Both numbers are then divided by the average true range, or ATR. This normalization matters. It converts raw price bending into a scale-free reading, how many ATRs the curve bends away from a straight line, so the same thresholds behave consistently whether you are on a quiet pair or a fast one. The acceleration reading is called the MinAccel score, and the velocity reading is called the slope score. Now for the entry. The strategy is looking for an ignition, not a state. For a long, it requires the MinAccel score to freshly cross above the MinAccel threshold, meaning it was inside the band on the previous bar and moved above it on this bar, and at the same time the slope score must already be positive, above the slope floor. That combination isolates the moment a flat or drifting market bends upward into an accelerating rise. The short side is a mirror image. The MinAccel score crosses below negative MinAccel, and the velocity is already negative. This design filters out two situations. Flat chop is ignored because curvature stays near zero there. And late, decelerating trends are ignored because they're the curvature points against the prevailing direction. Risk management is entirely ATR-based. When a long is opened, the stop loss is placed SLATR multiple times ATR below entry, and the take profit TPR multiple times ATR above it. By default, that is 2 ATR of risk against 3 ATR of reward, a reward to risk of 1.5 to 1. If the strategy is already holding a position and an opposite ignition appears, it closes the current trade first and then considers reversing. Otherwise, the ATR stop and target manage the exit on their own. A spread filter feels realistic by skipping trades when the spread is unusually wide. Here's the core of the code as it appears in MetaTrader. At the top are the input parameters you can adjust. RegPeriod sets how many closes are fitted by the regression, 20 by default. MinAccel is the acceleration threshold, measured in ATRs of bend. SlopeFloor is the minimum velocity needed for direction to agree. ATRPeriod controls the ATR, while SLATR multiple and TPTR multiple define the stop-loss and take-profit distances as multiples of ATR. Max spread point skips trades when the spread is too wide, and lots is the trade size. Just below, you can see the two normalized readings being computed. Accel score, the curvature divided by ATR, and slope score, the endpoint velocity divided by ATR. Now look at the two signal lines. The long signal is true when the previous acceleration was below MinAccel. The current acceleration is at or above it, which is the fresh cross, and the slope score is above the slope floor. The short signal is the exact mirror. The previous reading above negative MinAccel, the current reading at or below it, and a negative slope. When the long condition is met, the strategy reads the ask price, sets the stop-loss SLATR multiple times ATR below entry, and the take-profit TPTR multiple times ATR above it, and calls trade.buy. When the short condition is met instead, it reads the bid price, places the stop above entry and the target below, and calls trade.sell. Both sides use the same ATR-based risk logic, simply in opposite directions. That symmetry is the whole idea. One acceleration test governs both buying and selling. Let's bring the logic to life on a chart. On top you can see the candles, with a smooth quadratic regression fit drawn over them in blue. Below is a subpanel showing the two readings the strategy actually cares about, the acceleration or curvature in gold and the endpoint velocity in blue. The dashed lines mark the acceleration thresholds at plus and minus 0.30, the default MinAccel. Watch the opening candles. Price is drifting sideways in a narrow range. Notice the gold acceleration line sitting close to zero and well inside the band. There is no meaningful bend here. The parabola is almost a flat line, so the strategy stays patient and waits. This is exactly the kind of chop the design is built to skip, because entering here would mean guessing, and the acceleration reading refuses to confirm anything. Now the character begins to change. Over the next couple of candles, price starts to lift, each close a little higher than the last. The regression fit turns upward, and in the subpanel the gold acceleration line begins climbing toward the upper threshold, while the blue velocity line has already pushed above zero. Here is the key idea. Acceleration leads velocity. The curve starts bending before the move is obvious, which is what lets the strategy be early rather than late. On the ignition candle, the acceleration crosses above the plus 0.30 level for the first time. That is a fresh cross, not a reading that was already sitting up there. And because velocity is positive and above the slope floor at the same moment, the long condition is satisfied. That is where the buy entry marker appears. From there, the rise accelerates. The next candles are strong, price pulling cleanly away from the range it left behind. This is the payoff of entering on acceleration rather than on a lagging average, because the strategy is already positioned as the move expands. Price advances until it reaches the take-profit marker, 3 ATR above the entry, and the long trade is closed for a gain in this illustration. Watch what happens next. The rally rounds over. The final push loses steam, the acceleration in the subpanel collapses back toward zero, and price stalls near the top. The target was met before momentum faded, which is precisely how the exit logic is meant to behave. Then the mirror image sets up. Price rolls over and begins falling, each close lower than the last. The regression fit tips downward, and in the subpanel the gold acceleration line dives, crossing below the minus 0.30 threshold on the ignition candle, while the blue velocity line has already turned negative. That combination satisfies the short condition, and the sell entry marker appears. The decline then accelerates through the following candles, price sliding steadily lower, until it reaches the lower take-profit marker 3 ATR below the short entry, closing that trade in the illustration. Notice the symmetry across both trades. The same acceleration plus velocity logic, simply flipped. In each case, The strategy waited for a genuine bend into a fresh trend, confirmed direction with velocity, and let the ATR target define the exit. No chasing, no guessing, just a defined and repeatable process that you can study and test for yourself. And that brings us to the end of our breakdown of quadratic trend acceleration. We covered how it fits a parabola to recent prices to measure acceleration and velocity, how it enters only on a fresh ignition with agreeing direction, and how it manages risk with ATR-based stops and targets. We also walked through both a long and a short example on the chart and read the core logic straight from the code. Remember, everything in this video is educational information only. It is not financial advice, not a recommendation, and not a solicitation to trade. Every strategy carries the risk of loss, and no approach works in all conditions. If you found this helpful, please like the video, leave a comment with any strategy you would like us to analyze next, and subscribe for more MetaTrader 5 breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.